Friends, welcome again. Let us discuss now the concept of computation of income, how income is computed. Relating to that, we'll also try to understand in which situation agricultural income needs to be merged or needs to be clubbed with your other non-agricultural income, just for the purpose of arriving at the tax rate. Then also we'll try to discuss, if time permits, something relating to the deductions, reliefs, rebates, exemptions, all these things. So let us first see the computation steps or computation process. Okay, friends, just have a look at this slide. You'll be getting some idea how it is to be computed. When coming to computation of income, first of all, what is relevant for us to know the residential status of the assets. So in our initial classes, when we are understanding the concept of total income, at that time, we had discussed this point, that the total income computation depends on the residential status. Have you remember?
Yes,
Yes,
sir.
sir.
So, but what is how to arrive at the residential status, or how to know, how to determine the residential status, we have not yet discussed. We'll be discussing it shortly. But first, we have to conclude that what is the residential status, whether that person is a resident or non-resident, and if where applicable, resident but not ordinarily resident. That is also one more possibility. So, first, we need to conclude about the residential status. Then we need to arrive at the gross total income. What is gross total income at this stage? If you want to know, it is the aggregate of all relevant heads. Okay, aggregate of income from all relevant heads, but you have to keep in mind the provisions of clubbing and the provisions of setup and carry forward losses. Have you remembered? I had told you earlier
Yes,
that all the 5 heads has to be aggregated. Income, all this income has to be aggregated, then clubbing provision has to be applied, then setup and carry forward concept also has to be applied. After that only you'll be getting gross total income, and that from that gross total income you have to allow this chapter 6A deductions. Okay, then you will be getting this total income. Okay, and this total income is to be rounded off, and this is upward rounding up. Okay, rounding off to multiple of ₹10.
yes,
So
sir.
this is as per provision of section 288A says this has to be upward rounded up. Okay, so this is what we know. This is what I will arrive at the total income. I'll be able to compute tax. Now you see few more points are also relevant here. What is that? To understand these points which are appearing in blue color, you can see all these processes are okay. Once it is rounded off, then you can compute tax by applying the slab rates or on the fixed rates as the case may be, depending upon the type of processing. But this is true when there is no agricultural income. If the assessee is having some agricultural income, then he has to do some extra. Okay. Now, I request some of you, please read this particular point which is within this blue color rectangle. Can you read it?
Yes, sir.
Agricultural income shall be clubbed with non-agricultural income when the former exceeds rupees 5,000 and the latter exceeds the basic exemption limit.
Okay, so this provision we need to aware of, that agricultural income is not taxable. We are aware of this. Today also I had shown you section 10. The first item there is the agricultural income, that is exempt. So we know that is exempt from income tax. Okay, but there might be a possibility that the person is having huge agricultural income and it is totally exempt. That's okay. Agricultural income is exempt, but that huge agricultural income that is there, that will be used to arriving at the appropriate tax. In our country, we are following a progressive taxation system. That means rich people should pay more tax and poor people should pay more. Poor people should pay less tax. Is it that? So if the person is having some other income, let's say maybe it's a tax-free income, that person should pay tax at a higher. even if it is agricultural. Are you getting?
Yes, sir.
That is the concept. So how to do it? So this has been done by a process. The process is that, as you have seen right now, if agricultural income you are having, fine, but if the agricultural income, let us say, exceeds what you have seen, 5,000 rupees. If it is not exceeding, no issue. And you're okay. Let me. I told you this agricultural income exceeds rupees 5,000. Okay. And your non-agricultural income exceeds basic exemption limit. Basic exemption limit as of now is 2,50,000 rupees. You know this. That is, if your income you are earning up to that, no taxes will levied as an individual. If you are an individual. Okay, yes or no? So that
Yes,
is what
sir.
we're saying. If you see here that now if you read it, agricultural income shall be clubbed with non-agricultural income. So now there is a need to club it. So both the things needs to be clubbed. When the farmer exceeds 5,000, what is farmer agricultural income 5,000 rupees, and the latter exceeds basic exemption limit. If this is there, then this has to be clubbed. So if this is exceeding 5,000 rupees and this is exceeding how much? 2,50,000. Let us say this is 2,60,000 rupees and this is 6,000. That needs to be clubbed. Okay, but this is, let us say, 6,000 rupees. This is 2,40,000 rupees. No need to club. Okay. Or
Yes,
this is non-agricultural 6 lakh. Agricultural income is 4,000. No need to club. But this is exceeding 5,000 rupees and this is exceeding 2,50,000. Then we need to club them.
yes, sir.
Okay. Right. So now what we have to do? How we'll be clubbing it? Now you see. Now your non-agricultural income arrived at the total income or rounded off. Then if clubbing is required, then 0.6 is applicable. What is 0.6? Add agricultural income. But when you will be adding, only when it exceeds 5,000 and non-agricultural income exceeds 2,50,000. Then compute tax and aggregate. Aggregate means agricultural, non-agricultural taken together. Find out what is the aggregate tax. Okay, compute tax and aggregate. Then
Yes,
what you?
sir.
Then step 8, what you do? Compute tax and agricultural income increased by basic exemption. Okay, up to 0.7 you have understood. Add agricultural
Yes,
income,
sir.
then compute tax.
Yes, sir.
Then let us say that point number 7, we will call that amount as A. Amount A. That's that amount, now leave it. Then parallelly one more calculation is what you do. Compute tax and agricultural income increased by basic exemption level. That means suppose your agricultural income is 60,000. So under 8 you what you do 60,000 plus 2,50,000. How much it is?
3,10,000.
On that you calculate tax. Okay.
Yes, sir. Yes,
First
sir.
you decide whether it is to be clubbed or not. If it is to be clubbed, then fine. Then you have to club. What you have to, how you have to club? Now you have decided agricultural income is exceeding 5,000 rupees, non-agricultural income is exceeding the basic exemption limit. Then you find out what is your gross total income. Okay. Then what you do? Deductions. Then you are getting total income. Right. Then you are rounding up. Then add agricultural income. Understood? Add agricultural income.
Yes, sir. If exceeding 5.
If it exceeds, then find out tax. Whatever tax you find. Then what you do, parallelly, do one more thing. Agricultural income plus basic exemption. Suppose agricultural income is 60,000 and basic exemption is 2,50,000. Total on 3,10,000 rupees, you find out tax. Find out what is tax. Okay. Understood. These two things you have to do parallel. Then what you do? Okay. Point number 8 is about that. Compute tax and agricultural income increased by basic exemption. Okay. Then compute tax. Then finally, what you compute tax? Compute tax by deducting 8 from 7. That means 8 you have computed one tax. What is this? Basic exemption limit plus agricultural income. Then this amount computed from in point number 8 needs to be deducted from step number 7. That means 9 is step 7 minus step 8. Okay. Why you are doing so? First, what I did, agricultural, non-agricultural income added. So automatically you move to a higher slab.
Yes, sir.
Then what I'm doing, since agricultural income is exempt, so I should not include it. The next step, what I'm doing, I'm calculating what is the tax on agricultural income plus basic exemption. So whatever is the tax on that, I'm deducting that. First, I included and calculated at a higher rate. Then I calculated what is the tax on agricultural income added to basic exemption limit. I'm allowing you as a deduction. That means agricultural income is not taxed, but non-agricultural income is taxed at a higher rate. Understood?
Yes.
Yes, sir.
Now, finally, after deducting this thing in step 9, whatever amount is there, now that needs to be again rounded. That to round it off. Okay. Up including interest, penalty, fine, all these things if applicable, add it, then round it up to multiple of ₹10. So let me explain you this concept once again. What I told you, agricultural income exceeds 5,000 rupees in the relevant previous year, and non-agricultural income exceeds the basic exemption limit, which is normally 2,50,000. For senior citizen, it is 3 lakh rupees. For super senior citizen, it is a 5 lakh rupees. If it is exceeding, then what you have to do, follow these steps. Add agricultural income with non-agricultural income. Calculate tax on step 1. Okay. Total as per current tax rates. Then add agricultural income with basic exemption limit. Calculate tax on step 3 as per current tax rates. Then deduct the tax calculated at step 4 from the tax calculated at step 2. Add health and education system. Compute total tax. Did you understand how to integrate agricultural income with non-agricultural income?
Yes, sir.
Got this point? In this situation, what happens? First, I added agricultural income on computed tax. Then I deducted the tax on agricultural. So effectively, I'm saying I'm not taxing agricultural income. But because of agricultural income, your tax slab may go up. Tax rate may go up. Okay?
Yes, sir. Yes.
Understood the process? Yeah, that is how tax is to be computed. Now, this is the exact process, tax computation, how one can do it. And if you are aware of that, if you go to income tax department's website, let me take you to that place. Now you can see the income tax department website. You can find here tax calculators. The calculators will be helping you to compute it, or you will be able to automate the computation. Earlier, I had shown you this calculator, tax calculator.
Yes, sir.
sir.
You can use it to compute it. And here is one more calculator, income and tax calculator. If you click here, you can find headwise. You can put the taxpayer, residential status. Then you see under different heads, you can also compute. Okay, from salary income, income from house property, capital gain, income from other sources, profit and gains of business and profession, agricultural income. Are you seeing here? Then deductions. So all these things you see, all the 5 heads plus agricultural income. Why it is appearing agricultural income here? Because it will automatically add it and again deduct it. Different rates. This is the complete. And if there is some delay in filing return, payment of advance tax, then this type of interest will also be levied. So this is by using this particular calculator, one may completely compute the tax liability and also can compute the income. Okay, when all the chapters will be taught to you, after that only you will try that different headwise how you are computing this. But did you now understood the broad concept? How
Yes, sir.
computation has to be done?
Yes, sir.
Oh, thank you. Now, yeah, as you know, when computing gross total income, you have to apply the clubbing provisions. Clubbing provisions are, in fact, we have to read section 60 to 65 to understand the entire clubbing provision. Right now, I am not going to teach all of them. Only for give you some broad understanding, some basic things. Let us say section 60 and 61, I'll be telling you. In case you want to learn what is clubbing provision, there is a separate video in our channel. You can, free time, you can have a look at that, understand how income is to be clubbed. Now, just to understand the clubbing process, you have to see clubbing means assessee has to pay tax in respect of income of other person. That means somebody else's income, but he has to pay tax. Okay, these are the two examples. While aggregating the income under section 60 and 61 is to be taken into consideration. See, this is one situation, which is section 60. Section 60 deals with transfer of income. Transfer of income without transferring the asset. Let's say asset is not transferred, income is transferred. Right? In that case, also income will be clubbed. Let us say house is not transferred, but rent is transferred to somebody else's account. Then that rent will be clubbed with transferor's income.
Yes, sir.
Okay. This provision say that if there is transfer of income without transfer of asset, the income shall be included in the income of the transferor, whether such transfer is revocable or not, and whether such transfer is affected before or after commencement of Income Tax Act 1961. It doesn't matter whether it is a revocable transfer or irrevocable transfer. If there is a transfer of income without transfer of asset, that shall be clubbed. Secondly, in case of revocable transfer of asset, income deriving from asset shall also be included with the total income of the transfer. Let us say asset is transferred. First case we have seen asset is not transferred, only income is transferred. Second case we are talking about asset is transferred, but asset is transferred, but it is revocable. That means it is the transfer is cancelable. In that case also, income will be clubbed with the income of the transfer. Okay.
Yes, sir.
What is the meaning of this revocable transfer? The transfer deed or agreement may contain a provision for retransfer directly, indirectly, whole or in part, income or asset. In this type of conditions are there, or gives a transferor a right to reassume the power. Transferor has transferred, but transferor has got a right to reassume the power. Okay, during the life of the beneficiary or the transfer. So if during if it is revocable during the life of the beneficiary or the transferee, then it will be considered as a revocable transfer. Okay, and in case of revocable transfer, then income will be considered as the income of the transfer. But this section 62 and 61 is not applicable when transfer by way of a trust or not revocable during the life of the beneficiary. So it is transferred through a trust and which is not revocable during the life of the beneficiary, or any transfer not revocable during the lifetime of the transferee, or transfers made before 1/4/1964 but not revocable for 6 years. So if these are the situations, then these two sections are not applicable. These are exceptional situations. But normal provision, you try to remember that in these situations, income will be clubbed. Got some basic idea? Detailed clubbing provision is a big chapter. You can either learn it or you may refer to the past videos which is available in the channel.
Yes, sir.
Okay. Now, similarly, let us understand the concept of setup and carry forward of losses. To compute gross total income, also you need to know what is the concept of setup and carry forward. Okay, very broadly or very briefly we have discussed it. Is it not? Income can be set up and can be carried forward. So let us understand the meaning of this. When I say set off, that means adjustment of losses arising from one source or under any head against another source or head of income in the same assessment year. That means setup happens in the same assessment. Maybe in one business source you are incurring losses, another business source you are incurring profit. They can be set up with each other in the same assessment. Okay, and it may happen in different heads also. Let us say under income from house property there is a loss, but income under salary there is some income. There is also possible to do setup between these two heads. But setup happens within 1 year, within the same assessment. Understood the meaning of setup?
Yes, sir.
But when we are talking about carry forward, it is different. If losses could not be fully set up, let us say there is a more loss and income is less than that, and always setup happens subject to some conditions. Let us say these conditions are not complied with, therefore loss could not be fully set up. So if the losses could not be fully set up in the current year due to inadequacy of eligible profit, such losses can be carried forward in the subsequent assessment year and can be set off in subsequent years. So current year's income is insufficient, so it can be carried forward to the next year and subsequent year. This process is called as carry forward of losses. Are you getting it?
Yes, sir.
Right. So this is the concept we need to know so that we can compute gross total income. Right. So when computing gross total income, you know there are 5 heads of income, but there might be multiple sources of income. We have discussed all this. Okay. Now, friends.
Yes, sir.
Okay. And in the context of computation income, we also need to understand what are these deductions, exemptions, rebates, and reliefs. Very briefly, I'm telling you all these things. Maybe next class I'll be telling you in detail. First, let us discuss about what the deductions and exemptions. Okay, broadly. So when I say exemption, that means this income is totally exempted, not taxable. When I say deduction, then from gross total income or from specific head, certain deductions are allowed. Okay, rebate is given and certain taxes computed and some rebate is given. Relief is also something is similar in nature. You have already seen the rebate relief under section 87A. That means when the total income is not exceeding 5 lakh rupees, entire income tax or 12,500 rupees is relieved of. Okay, so all these 4 concepts we'll be discussing with the help of some examples. Maybe in the next session we'll be discussing about all this. Up to this, is it clear to you?
Yes, sir.
Yes, sir.
Any query you have?
No, sir, not as of now.
Thank you very much.